All right, good morning, everybody. We'll get started here in a couple of minutes. Good morning. Hope you guys can hear me okay. Gonna clean my glasses here. Man, there's a lot going on. Holy cow. So much opportunity. So we'll talk about some of this here in just a second. There we are. Here we go. That's better. This chair is squeaky. I'm trading too much. Might have to get a new chair because all the time spending on my screen. All right, let me see here. You guys hear me okay? Let me quickly check what YouTube looks like here, making sure we're streaming. And then we're gonna launch here. Here we are. All right, cool. We're already, it's time to go. It's 2 minutes past the top of the hour. Good morning, everybody. Hope you guys are doing well. Again, if you're here for the first time, Serge Berger here from The Steady Trader. This is our Set the Market morning show. We're going to go through the top things on our mind here. That kind of is what separates us. We're going to start using guests here as well, just so you know. But it is meant to be just 10 to 15 minutes going through the biggest things that we're watching. So let's get started. I'm going to start off this morning in no order of importance, although there's one thing that is very important here, I do think, from a sentiment perspective. I do want to talk about, we're going to look at Netflix, so hold your horses. We will look at Netflix. We will look at United Airlines. I think there's opportunity there, although we need to see what the initial reaction looks like on a end of day basis. So we'll talk about that. Then I want to show you everything that's beating the S&P 500 so far, which is like many things, okay? That kind of goes into the year of the trader. And then I want to show you, and I want to talk about this Stargate thing and what the opportunity might be there from a trading perspective. Yesterday we had an announcement. President Trump had this news conference with Larry Ellison and the Japanese investors and the AI guy, I always forget his name. And I actually think that's an important deal. However, maybe in a different way than you might expect. It's not about NVIDIA. Let me just put it that way. Okay, so let's start off big picture first. So there's a lot of calls out there right now for dollar weakness. And I will tell you, if you follow a process, the dollar from a momentum perspective is, even from a momentum perspective, is still bullish. So this is our TSD trender work, and not until we get negative or bearish momentum, that would be the earliest at which point I would put on shorts, whether it's a stock or in this case the dollar index. This is the dollar index. And the dollar index, I do think at some point the dollar will weaken. I'm not sure it's there yet. In fact, our signals say it's not there yet, but it can happen fast. Let me just be clear. So we remain bullish in bullish momentum. You can see the dollar index became a buy in October, then rallied very sharply. But even from a momentum perspective, we don't yet have the dollar going bearish. So just as an FYI, I will make that call once we start seeing it happen. And certainly from a trending perspective, right? That's the way we've built this. In fact, let me try to show it to you another way as well. Certainly from a momentum perspective, and a trending perspective, the dollar is not yet bearish. Again, that can happen, and that'll set up a whole lot of opportunity, but it's just not there yet. So the dollar index essentially remains bullish, and that's that. Bonds as well. I mean, a lot of people are now calling for bond yields to go lower, bond prices higher. I just don't see it yet. So this is 10-year yields, and you can see we're just not breaking anything. So it's just too early for me to make that call. You look at 10-year yields here too. Again, we still have bullish momentum. This is using the TSD trender momentum indicator. Again, at the very earliest, I would make a call on momentum on bearish anything when momentum changes, and it hasn't changed yet. So that's big picture. I thought I would take a minute on that. So let's get a bit more actionable as far as equities are concerned. So the equity market, the S&P 500 remains in this consolidation phase. And so, people who buy dips, which is what people do blindly, I might add, and I think that's why they're going to all lose a lot of money this year. They did it again in mid-January, and they were rewarded. The problem from those people will come once we don't break out. If we don't break out. I think it's too early to make that call. I will tell you from a momentum perspective, we do have the S&P 500 now in a new momentum buy signal on the daily chart. Again, this is using our TST trender momentum buy signal. However, and the reason I'm not buying the S&P is because we remain in a choppy sideways range. So if you look at this range here that I drew in, this is the green area. The S&P 500 remains in a choppy range. Now, obviously this morning, the market's going to gap up higher once again. So we're going to have the third up gap in a row this morning. It is extremely likely that they're going to start filling at least one, if not two of those gaps very quickly. So for those of you guys that are in our trade ops chat room, which is our new focus from a trading chat room perspective, I think we're going to see today's gap fill, and I would be surprised if we don't fill yesterday's and then ultimately even the up gap from Friday in not too distant future. So this morning, I can't show you today's gap yet because the cash session hasn't opened yet, but I will show it to you in real time this morning in the trading ops chat room, which you guys should have access to if you're a member of any of our indicators. So this morning, it looks like we're going to open up, 0.5%. So anyway, we'll see what it is, but it's going to be something like this. And then so that's important from a trading perspective to be mindful of these gaps underneath. It's not normal, okay? And I know this is a lot of people are new. It's not normal to have this many gaps, 4 gaps in a row, in a row, let's call it, and at least not 1 or 2 of them filling pretty quickly. So today's up gap to me has an extremely high likelihood of closing today. If not tomorrow, if you can always get, again, price can remain very irrational for a longer period of time. So that's what's going on there. Why are we gapping higher? Well, I mean, you can obviously look at stocks like United Airlines, which is one stock that I want to show you here. First of all, where we are in the broader spectrum. So United Airlines has been consolidating since, if we can call that consolidation, it's actually already broken out. But let's for argument's sake say we did consolidate for the past couple of months, which we didn't. We actually started breaking out again in the middle or early part of this month. We're set to open the stock around 117. I wouldn't be surprised if it go to 120. So this is United Airlines. This is not Netflix. We'll get to Netflix in a minute. And so I get it. Look, there's a lot of algos. Some people are still caught short in this stock. I wouldn't be short the stock here, to be honest. But again, momentum here is probably going to get exhausted. So I would be very careful buying the stock here. This is one of those where I'm looking for a Vertical X Pro overbought signal, which I think we're going to get. So that's where I think we might need to pay attention. Netflix is obviously the other story, and just mind you, this is all algo driven, right? The stock this morning is trading just north of $1,000. So give you some perspective where that is. That is up here. Let me give you the arrow. So the arrow is the $1,000 is about here. So here too, it's probably quite likely we're going to get a Vertical X Pro overbought signal. That's extreme overbought readings. So I think we could get there this morning. Again, market hasn't opened, so I can't show you. But I would watch those two stocks very closely today. If any of those start to fade, then that'll be an early indication that these gaps on the S&P 500 start to fill. So, and typically they don't fill like gingerly. They will typically fill pretty quickly. Again, I'm not making a forecast. I'm telling you once these things trigger. So this is not triggered. So keep that in mind. So they typically tend to go fast. So it'll go boom, and then probably boom. And then ultimately, I think the up gap from the 17th will fill as well. Now, again, this doesn't have to happen today, obviously, but I think we're going to start to see at least today's gap, to me, has a very high likelihood of closing today. And I would also watch, again, Netflix is going to be a very important stock. And so you had a double whammy last night. You had the Netflix news, you had United Airlines, so some earnings. And then on top of that, we had this Stargate news conference that I mentioned just before. So what's happening in pre-market, we are seeing stocks like NVIDIA gap higher. We're seeing, and I'm bringing these over, we're seeing stocks like Oracle gap higher. And the reason for that, so NVIDIA is going to open around 145 this morning. That's on the daily chart. It hardly really changes anything, but it's about here. So we're still within this choppy, NVIDIA's in a choppy trading range. Don't let anyone convince you otherwise. It's just where we are. Until we break out, we're in a trading range. For all I know, we break out today. I think that's unlikely, but for all I know, that's possible. But not until then are we in a new directional move that I would take serious. So we had this double whammy of Netflix, United Airlines, again, this whole thing around energy, which actually I'll get to energy, around Stargate, which again, if you haven't seen the headlines yet, pull up your Wall Street Journal subscription. I hope you have one. You need one. It's an important thing to have. In my view, I'm not getting paid by saying that, but I think it's an important thing to have because it gives you perspective. So go read about Stargate. Basically, what they're doing is they're investing, and there's not enough information on this yet, right, to make a lot of conclusions. But there's one conclusion I can make. So what they announced yesterday is they're going to invest up to like $500 billion is what they're saying. Again, not enough details yet into AI infrastructure. They're basically building trade data centers and whatever goes into it. I'm not a techie guy, but I'm going to start getting into this, reading up on this and much more as we get more details on it. The one thing that I can tell you that it's undoubtedly bullish for is energy. Okay, now not for the next 5 minutes or the next day, but that is a massive tailwind for energy, which is, if you've been listening to us for a while, that is our base case is energy. You know, and it doesn't matter how much they want to drill and how much supply they want to unlock. You know, AI data centers, all that stuff takes crazy amount of energy, and so that's very, very bullish on those things. So, for example, natural gas, and natural gas is volatile as hell. So please keep that in mind. But natural gas is certainly in a position here to start acting a hell of a lot better. And I think natural gas is typically better looked at on a weekly chart. So it's a mess. It really is. But it is starting to make some moves here that I think we have to pay attention to. But again, the why here is actually important. So this is making a move because we're starting to see, you know, again, more energy friendly regulation. But contrary, a lot of people, when I first say that, and I'm going to say 9 out of 10 people, when I first say that, they're like, oh, well, that means there's going to be more supply, so then the price goes down. Well, that depends on what the demand is. The demand is through the roof, and all they're creating is more demand. So I actually don't think that's the case, at least right now. That's, you know, we can always argue this another time, but that's kind of what we're looking at. So, you know, we've already been bullish on things like energy infrastructure, things like let me quickly show it to you. And this is less about individual stocks, guys, as it is about understanding where is the opportunity, which sector, which parts of the market. I would love it if you guys start thinking a little bit less about individual stocks and more about what's the sector or what's the part of the market, because you can have a much higher hit rate if you start doing that. But a lot of retail investors start the other way around. They see, oh, there's a chart breakout, it's stock XYZ. But if you understood why is that stock breaking out, and you go sector level, you can have a much, much better P&L over time. I know it usually takes people blowing up a portfolio or two before they get to that, but I'm hopeful I can get you there this year. That's one of my goals, right? So BKR is Baker Hughes. We already did a trade on this one. This is a straight off of the momentum indicator off of our. Let me quickly show it to you off of our TST trender. If you don't have it yet, please get it. I'm getting tired of saying it. I don't want to wear you guys out, but it's important. So BK. So and again, this is already happening. Is my point. So you look at stuff like Baker Hughes. Again, this is a energy. It's actually energy services, but there's a lot of stuff going on here. So these things are already moving, and this is actually correlated to natural gas, this individual stock. So it helps to know why is something moving. What always gets me is when people say it doesn't matter, I don't care what the stock is or what the ticker is. Like, it does actually matter for perspective, for risk management. I'm not saying you have to go deep and do fundamentals and do cash flow analysis and whatever. I don't think that's necessarily necessary for trading. But it really helps to have a perspective. So Baker Hughes, BKR, got the TSD 200 buy signal, reached a free profit target. We actually took profits on this one already if you're a TSD trend member. But these are the kind of things that are already moving. Utilities, I'm a little bit more careful about because utilities can act as bond proxies. So I'm a little bit more careful on utilities. But from a pure trading perspective, they gave us a new momentum buy signal on Monday. Last Friday, excuse me. So, you know, a lot, if you guys use the market rover, I know a lot of you guys do, go look at utility stocks. A lot of them are giving us new buy signals right now. So there is something there. I'm a bit more careful because they're bond proxies. So that's the reason I prefer to go and look at stocks like in the energy space, like oil refiners, you know, and just a lot of that, and a little bit less so utilities. Oil refiners, by the way, the CRAK ETF is giving us a new momentum buy signal as of yesterday. CRAK. If you're an ETF Silo Pro member, you know we have that stock on there. Last but not least, I do want to quickly show you everything else that's outperforming the S&P 500 so far. And I wouldn't be surprised if this is going to be the story of this year. I know no one wants to hear this, but at the end of the day, trading is about, and investing is about making money as opposed to having views that are stubborn. So you look at the Eurostoxx 50. Here's the Eurostoxx 50. It is up 6.6% year to date. How many of you have heard headlines that Europe is going down the drain and Germany's blowing up? The Eurostoxx 50 is up 6.6% this year. You know how much the S&P is up? About a third of that. Okay? How is that possible? It's possible because a lot of the headline stuff that you're reading, it's all baked in. A lot of times. Not always, but a lot of times. So before you put on your Euro-hating hat or whatever, you know, crap is being put out there, understand that markets are forward-looking mechanisms. You got to start thinking like an investor and like a trader as opposed to a chart-chasing clown on Twitter, right? That's really what I'm trying to do here. And so you have got to, this is the year of the trader. We really have to be thinking like that. So what about the DAX? Well, according to the headlines, the DAX should be going straight down. The DAX is up 1.22% today, right? This is the DAX. So the DAX, since our momentum buy signal in November, is up almost 10%. You know what's not up 10%? The S&P 500. It's basically flat. Okay. So again, please, guys, before you become a headline running lemon, just understand that markets are forward looking. And so that's really important. That's why we use momentum as work. That's why we use a trend as our backbone for that. So that's really, really important. A couple of questions before we move on. Nicholas is asking, will the QQQ gaps fill before big tech earnings? I have absolutely no idea, Nicholas, and I have zero clue about that. What I can tell you is that we will get a signal when they start to fill. That's what's going to happen. So if you are in our trading ops chat room, which all of you guys that have an indicator should have access to, we will see if these gaps start filling, and I'll highlight it. I don't want to make foregone conclusions. In the year of the trader, I want to be open-minded. I want to be very open-minded as to the opportunities in both directions, right? So for everyone that's short the DAX because the headlines and some clown on Fox TV is telling you that it's not, that the Europe is going down to zero, look at what the stock market's doing. It's telling you a very, very different story, right? And so that's I think really, really important. Look at OKLO. Okay, so I don't even know what this is. Let's see here. Oh, this one. Well, that's a CFT. Yeah, that's nice. Look, it's just all it is one more stock within the energy space. So that's nice. So it's a good one. We got a TST momentum buy signal, and that's working nicely. So that's good. Mitch is asking, if you don't take trender signals, how many it is? Oh, trender. Typically the signals. I typically, after about a week or so, I will say they become less significant. That's kind of my time frame. Al's asking, would you put on a SPY put to hedge? Yes. The SPY, let me quickly go to that. So first of all, I'm having a lot of conversations with our clients on Blue Marlin Advisors, our investment advisory firms, or our investment management clients, and we're starting to really manage expectations in terms of the S&P 500. Look, for me, the SPY is going to matter on, and this is, I can't believe I'm even saying this out loud. It's so pathetic, but it's honestly what's happening. I need to know what's NVIDIA going to do. So if and when, and I say if and when, again, I want to be open-minded here, NVIDIA starts breaking below its 150 period moving average, which is that line right there, that'll be my clue to definitely get much more bearish on the broader market. Is it good to put on a SPY hedge right now? Obviously, I can't give you advice, but I can tell you being hedged is always a good idea. One strategy that we're talking to a lot of clients about now over on the investment advisory side is switching from basically long equity exposure into hedged equity exposure. There are strategies that we can offer as an investment advisor over at Blue Marlin Advisors. That's a separate company, obviously. That is not available like through an through things that people can access through like ETFs. Certainly not in the same manner. So yes, I mean, I don't think it's a bad idea to put on a SPY hedge. I don't get a signal. So in fact, the S&P just gave us a new buy signal from a momentum perspective. So you look at SPY again. We just got a new buy signal, but we remain in the trading range, right? So that's I think that's really important. Raquel's asking, what time does the chat room open? The chat room's open right now. The trade ops chat room. If you have access to an indicator, you should have access to this. It's gonna start being a separate thing as well going forward, but it's open. I mean, I'm not in there every 5 minutes of the day, but there's constantly stuff. We're just getting launched on this now, and it's because it's a year of the trader, and I wanted to wait until past inauguration because I think now the trading is really starting, and a lot of people are going to get a lot of fake out breakouts this year. So we want to start getting really active. But yeah, we're in there. I've already put in a few things. There's a few things that are about to go. I'll give you one thing that I mentioned in there. CCJ is Cameco Corp. This is a stock that not only acts very, very well technically, but you can see it's bouncing off the 150 period moving average. But more importantly, it's got a great backstory. Cameco is uranium. I'm very bullish uranium, even more so after yesterday's news with this big investment in AI infrastructure. And again, let's understand that this is a momentum trade ultimately. And so we are getting very close from the TST trender to start getting a buy signal. We had a beautiful sell signal that worked very nicely, free trade target. So then in total, the stock dropped about 10%. And now we're getting close. It's not there yet, but we're getting close to a new buy signal. So I put that into the chat room as well late yesterday. I got to go, folks. Thanks for joining. Have a great day. We're just getting started here for the year. Also, by the way, gold is outperforming the S&P this year. Gold's up almost 4.5%, and the S&P about 3% year to date. So there's going to be a lot of this S&P centric focus where people are going to get completely sort of their heads cut off. So we want to make sure we respect that it's probably not going to be the S&P that's going to be the best performer this year. So anyway, thumbs up, like if you enjoy this. Please subscribe to the channel, very important, so that you update it in real time when we go live. Hope you enjoy this. Year that the trader has started. See you guys back here tomorrow on Thursday. Take care.